Good morning, everyone. Well, it's morning where I am. I hope everybody's having a good week so far, and welcome to your Daily Five. This is where we have about 10 minutes to present about five charts. Sometimes they go over a little bit, but today I do have five charts, and we're going to look at some important levels to be keeping an eye on. And I'm going to use the SPY chart, the SPX chart, and the triple Qs. And then I'm going to update the GLD chart that I presented. That was back a few weeks ago on your Daily Five. You can look up that episode if you're interested in that. And then I'm going to show you a new symbol today, SEAS, which is for SeaWorld. So let's just get right into it. I'm going to be going to my charts. Okay, so this is a chart of SPY. We're on a daily chart right now. I want to show you this pattern and some of these retracements on here. Then we're going to look at the SPX weekly chart. So this is called an ABCD sell pattern. However, with these patterns, there are some things that traders have to watch for that can be warning signs about the pattern, and that can say that they may extend to either higher or lower prices. And we certainly have some of that with this pattern. So let me point out to you what those things are. Back here in late February, we had a strong move off of the lows. And then this was a retest of that 4,100 area and another retest here. And you can see these very strong bars to the upside. And there's a steep ascent with these bars. So that tells you that there is, without even looking at an indicator, that tells you that there is some strength in the market. So when these get to either retracement area or a completion area, and these can have a couple of completion areas, these are extensions of this leg here, then the trader has to be looking for something that tells them that the market is ready to turn in the direction of the pattern. Now, this ABCD is a sell pattern, so the trader would be looking for some type of a sign that it's ready to turn down for a retracement. On the intraday charts yesterday, we got that, and there was on the futures, there was about a 58-point range, so it was tradable intraday on that. However, on the daily charts, it has not shown any sign yet of that reversal. So now with that, let's take a look. Oh, the other thing I want to show you on this too, with these retracements, I'm using the high to the low on here. Notice how the 382 retracement, the 0.50 retracement, notice how the bars have not found on this leg up, have not found resistance. It just went right, price went right through that. The low here retested that 382. This is what I call backward fib ratios. This is where the Fibonacci ratios, what was once resistance is now support theory starts to work with this. Yesterday it closed with this doji, and today it's above this doji. So my expectation for this is that it's going to get up towards this 0.618 here. And we may see some resistance and possibly a little bit of correction to the downside. Okay, with that, let's look at the SPX on the weekly chart. Let me walk you through this chart. So this is a weekly chart, longer time frame than the daily chart that we're looking at. I have a couple of trend lines drawn on here, and this horizontal pink line, this is going back to when the market started the decline to the downside. And there was this very long candle on the weekly. This was the longest candle on the weekly chart that we'd seen for some period of time, at least a couple of years. And so a lot of times right around the halfway mark of a candle like this can find resistance. You can see here that the market, it popped above that halfway point where the pink line is, but the closes and the opens were right at the halfway mark, and then it declined further to the downside here. Now the market's just getting back up to this area here. However, I think these highs here and these highs are going to be more in line with the market coming up around this 0.618. Again, this is the SPX, and that's right around 45 and a half on that. Now, the important lows to be watching if there were a turn back to the downside, another strong turn down, are going to be these lows right here. There's a couple reasons for that. One, the market has tested this area a number of times. We have a test, a low here. This is a trend line coming down here. This down bar closed right at this area and was able to hold it. And then the market opened at the same area and has been able to push strongly to the upside. So any break of this trend line and these lows here, I believe, will bring the market down to some retracement levels from the March 2020 lows. But again, it has to break and close below these areas. So we're talking about using closes here. Okay, so now let's look at the triple Qs, and keep in mind these retracements from the low of 2020 March to the highs here and 382 and 50. And I'll show you on the triple Qs right over here. Bring this chart up. Okay, so the triple Qs, we're using this for a proxy for the Nasdaq today. If I can squish this up, here's the March 2020 lows up to the highs late last year. And you can see, I'll spread this out for some detail again. You can see that the triple Qs and the NASDAQ did retrace down to that 382. However, the Dow Jones Industrial and the S&P 500 did not make a retracement down that far. That's why I think it breaks that low that I just showed you on the SPX chart. It'll be getting down to that level. Now on the triple Qs, a couple things to note here. So down here, let's look at the RSI on here. The RSI, I've got marked some support area on the RSI, also going back to March 2020. Here, this dash lines where some support area was in the RSI, and that's where you can see the RSI started to range and use that area as support, even on this decline here. So on this, on the decline to the 382, the RSI was able to hold above these lows here from late January, and then also started to climb to the upside. Well, that formed a range, and this range breaking above that level there in that RSI range is telling you that this is a very bullish move to the upside. So that's why even these lows here in the triple Q, same as the SPX I showed you, if they were to be taken out, it would, I think it would be a strong move to the downside, because that is a strong support area right now. Now, the triple Qs prior to this decline had formed a sideways range, and you can see the highs and the lows were tested. The center line where the dash line is right here is an area that price spent a lot of time around. You can see it, one last test to that center area before it broke to the downside. I think it'd be reasonable to assume that the price will return back up. Let me take a couple of these retracements off here. Just leave on the one I want right now. Actually, I'm going to put this one back on. Put this on so we can see some retracements to the upside. So again, you can see the retracement from high to low. The market's coming back up. It went right through this 382. I think it's reasonable to assume that it will get up close to this 618 and retest this area. It may have some jiggles, up and down, but I think it's reasonable to assume that. And the RSI is showing some strength on that. Okay, let's move along now and let's look at GLD. Just want to update this again real quickly. So again, you can find this on the prior episode of StockCharts that I've done. We were looking at this prior to this breakout. Then the market had the breakout, it moved to the upside, and now it's having a correction back down. Well, here's the trend lines that need to be, monitored if the market is just testing it. It may come back down around this gap area. It can test down to the trend line. But the important area for the market to resume the upside is going to be right up in this area. Right up here, this was a 786 retracement. The 886 is right above that. But I believe another move, another leg above here, and the market is going to be testing these highs. If it breaks it, they'd be looking around that 200, 210 area for gold. So let's keep an eye on this, and we'll continue to monitor this. But I think a break below this trend line, and it's done with its move for now. Okay, now the last one that I want to show you today that caught my eye, I was looking through StockCharts, and I was looking through some of the sectors, and I noticed the consumer discretionary sector has been very strong. And so I started going through some of the stocks, and I noticed this one. The symbol is SEAS, and this is SeaWorld. A lot of you, I'm sure, are familiar with that. But one thing that caught my eye with this is that there's some strength to this stock right now. Is if we look at just with the move that the market saw earlier this year, SeaWorld did not really have any kind of a large decline, didn't break any lows here. It's been holding with some strength. And as the indexes have been retracing back to the upside, SeaWorld is on a higher retracement. Let me show you what I mean. We just looked at like the Qs, and it's not even quite to the 0.50 yet, or the 618. And SeaWorld is already back up to the 1.0. Now, generally, it's been my experience using some fib ratios for retracements that right here above the 786 is the 0.886 retracement. And generally, when a market gets above that 0.886 and closes above it, it gets at least to that 1.0, and very often it will exceed that up to the 127 or 1618 Fibonacci extensions. Excuse me. So the other thing that I noticed with SeaWorld was the strength that the RSI is showing. So right here where my cursor is, that's the RSI is at 48, just under 50. That's very strong for this pullback, and it has maintained that level. I'll just mark it in real quick so you can kind of line this up where those RSI lows have been with price movements. And if price breaks here and RSI continues up, especially breaking this peak, should be a stronger move to the upside. So that's it. That's what I have for you today on your Daily 5. Feel free to come visit me at Trading Live Online, and I'll see you on the next episode of your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.